We should point out Google shares down just a little bit here, partly on the dilution that will come out of this. But I'm more focused on the money and the money that's being, I know they telegraphed this already, but this is already a company sitting on $150, $160 billion cash on their balance sheet. Do they really need to go to the public markets for this?
Well, right now they feel, the window is right in terms of raising money. We see so many companies, big IPOs, in terms of the money that is being raised. And in the case of Alphabet, even though they raised their capex, it feels like they could do more simply because they have the advantage of vertical integration with TPUs, their own LLM, where why would they be equal in capex to a Microsoft? And that's where I think they're trying to go bigger.
So I want you to just take a step back, particularly for our viewers that haven't followed this much. When we talk about seeing, $80 billion, well, in this case, $180 to $190 billion being deployed on capex, where exactly does that money go?
Well, it's for building data centers, for giving money to TSMC to make those TPU chips, really doing things on an end-to-end basis. Unlike a Microsoft or a Meta that have to buy those chips from NVIDIA and pay those, 75% gross margins, Alphabet is all using its own chips. And even Anthropic has trained its model and uses TPUs even for inferencing. So from that perspective, Alphabet is a competitor to an OpenAI and Anthropic. It is also a competitor to NVIDIA on the chip side. And that's the advantage they have in terms of allocating more of their capital towards the chip-making efforts that others don't have the benefit of.
So eating its own cooking, and in that sense, fighting multiple fronts here. You think about this $80 billion, when you think about those, sort of twin races, more than twin races, that it's in right now, how far does that go to sort of solidifying Alphabet's place and maybe also taking share here?
Well, I mean, we know in terms of their credit rating, they can issue a 100-year bond as well. And they've been very successful in all sorts of fundraising with regards to their data center effort. But look, when it comes to market share, right now, we have heard from NVIDIA, compute is revenue. And the more compute you have, the more revenue growth you will have. And so from that perspective, and NVIDIA prepaying TSMC $120 billion just to lock in capacity goes to show the power of having that strong balance sheet. And even though Alphabet has a strong balance sheet, it doesn't hurt to raise more money, just to go big in terms of the compute side of things.
And this is also interesting that you take a look at some of the details here. This ATM program is intended to also facilitate for a period of time in admin change and how Alphabet meets the tax obligations when it comes to employee equity grants, saying that this approach will mimic a sell-to-cover model, meaning that upon vesting of restricted stock units, shares will still be delivered to employees net of taxes, that the company will use corporate cash to settle taxes on behalf of employees. I'm going to think about that for a while, but I mean, I wonder how it ties into this talent race that we're seeing among a lot of these big AI companies. I mean, we're talking about AI, but it's being built by humans still, and I wonder if this is part of that.
It certainly is. And look, I mean, if you are an engineer working in AI at Google and you see, OpenAI and Anthropic going public, there's always that attractiveness in terms of, a fast-growing company going public. And that's where Google has to do its part in terms of, retaining their talent.
I do want to ask you about some comments that we heard a little bit earlier, or overnight, I should say, out of Jensen Huang at that big conference going on, that was going on in Taiwan. Obviously, the big chip reveal for PCs got a lot of the attention, but he was specifically addressing this issue of kind of the death of software. Basically kind of said, and to paraphrase him, look, basically the way this market is growing, you're going to need more software engineers. And I do wonder, particularly when you look at the rally that we've seen in software names over the last few days, was it kind of premature that investors kind of threw a lot of these names out the window?
I mean, right now you will see, there will be a lot of back and forth when it comes to software, simply because we had very strong results this earnings season from the likes of Datadog, Snowflake, MongoDB.
Yeah.
And so, the thesis around, software companies really slowing down in terms of their growth rate didn't really pan out for a large chunk of software this earnings season. But look, there's certainly an impact that these model companies have had in terms of the growth rate. So we will see some of the companies do take a hit as well. So it will be a little bit of both for the time being.